Yes, we enter this jolly holiday season. My damn bank account is already suffering.
Mm,
Miss Parker,
what?
you know Christmas can plus a bank account,
It's
can
the most wonderful time of the year.
unless you paying for it. Don't feel like the most wonderful time of the year
What you want? What do
when
you want
you
me
the
to do
person
about it?
that's sitting up here like, I am paying the fool.
What do you want me to do about it? Like, for real?
I don't know, child. We gonna figure it out. And if y'all ain't figured it out, it's Michael with
It's Tatiana.
Miss Parker. How you feeling today? Besides being in a jolly, holly, Christmassy spirit,
Well, I never said that.
I was just trying to give you the benefit of the doubt.
Yeah, no, never said that. I might be Grinch.
Her kids won't let her live that up, so y'all don't even fall for the okie doke. But once again, thank y'all for tuning to the Watch for the Hook Business and Entrepreneur podcast on this Watch for the Hook Wednesdays. Hey, me and Miss Parker gonna go and get into it right now. We're gonna talk about how using the equity in your house can help you benefit in other ways.
Yeah.
Using that loan, what are we talking about? Loan?
Well, that's the loan to value ratio, right?
Okay, yeah. But
That
go
oh
ahead.
no
No,
no.
no, go. You got it.
I'm like, that's kind of if you have that equity that's built in and you're trying to borrow against it or put it up for collateral or anything,
Because me and Miss Parker were trying to figure out.
but you gotta have it first.
So this is for homeowners. If you rent or business,
Physical, physical business,
yeah.
right? Not just business owner, meaning you exist in e-commerce,
Yeah,
right?
no.
Physical.
You gotta have a physical
Yeah.
location. This is
Yeah.
for people who own a physical location, business wise, also own a home.
Mm-hmm. Mm-hmm.
For us, when we talk about flipping it, how do you try to use this money to help flip it to do something else for you?
Yeah.
So we was sitting there discussing, we gotta, Tay, get ready to head, and she's in senior year, heading to college. And we were sitting up there talking about, man, how did all these people back in the day send so many kids to college? And I'm not talking about the rich folks. I'm talking about middle class, working people. And you're like, how did they finance it? How did they
Yeah.
pull it out? If it's not, you didn't get I know we're not talking about student loans. We're not talking about scholarships, athletics, academia. We talking about how did
Oh yeah, yeah. No, I think you covered it all. You covered it all.
how did other people,
Others.
how did people figure out other ways to basically help their kids get a college education
Yeah. Yeah.
when everything else couldn't have paid for it?
Right. And I think you hit the nail on the head when you said when all the other resources, whether, individual or combined, could not cover that entire cost, right?
Yeah,
Yeah. Yeah, you're right. Yeah.
and so we ended up discussing and talking about how people had built-in equity either in their business or in their home ownership.
Yeah.
And you basically could borrow against what you technically own.
Right. If that gap is there. And this is like right now in this particular specific instance or particular instance is speaking primarily to like a house,
Yes, house.
like a house, like a physical door,
Yeah, homeowners.
that you have you have a mortgage tied to, right?
Hmm.
That mortgage is basically that lien,
Yes,
okay? It's on that title, right?
yes.
So you got a mortgage and you've had that mortgage for, it was we're gonna say it was a 30 year, right?
Yep.
You've had it for 15 or 20 years and you've been paying on it, being the good productive citizen that you are, right?
Hey, staying on top of your game, as I like to call it.
So if it's a 30-year mortgage and you are 15 years in, then you should roughly look like you're around the halfway mark, right? I
Yes.
say should loosely,
Yeah.
right?
And even also with that, we've talked about how property value can increase.
Listen, that's the goal, appreciation
So
versus depreciating.
So let's just say you had a house when you got into your mortgage, it was worth $250,000.
Come on, Hal. Now 250.
Well, I'm just saying,
Yeah,
I ain't
yeah, we
trying to
ain't
sound,
judging it.
yeah,
Yeah,
I ain't
yeah,
trying to
yeah,
sound
yeah.
uppity or none of this
Look at the
shit.
number. Look
Yeah,
at the number.
yeah, we just look at the number.
Number only.
So the number just says, hey, we got into a $250,000 mortgage
Mm-hmm.
15 years ago.
Out of how many years?
Out of 20, 30.
30?
No, say 25.
25? That's an odd number.
So 20?
30. That's
Okay,
for the
30.
classic.
Okay. All right. So you have paid 2/3 of the mortgage that you signed up for 20 years ago because you only 30.
Yeah, but you pay 15.
Oh, so we paid
You
15.
said 15.
Okay,
That's not
child,
two
I
thirds.
got you. I'm
Your
right there
math
with you.
ain't math.
I'm math ain't math. Okay, so you've halfway completed the race.
50%.
You
50%.
50% in. But guess what?
Installment wise.
Installment wise, you're
You
50% in.
out of what, 300, you pay 150.
Exactly.
Okay.
Okay, so out of the $250,000 loan, you pay roughly half. But guess what?
Air quote, air quote.
Air quote. Guess what? Your property value increased.
Right.
So now your $250,000 house that you purchased
Yeah.
15 years ago is now worth 310.
Okay.
Guess what you just got extra to borrow with?
Where'd you get extra?
$60,000. Am I wrong?
No, you're right. But if you're 15 years in on a 30-year mortgage and it's gone from 250 to 310, you should have that 60 plus some.
Okay, so
Yeah. Yeah.
at minimum,
At
that's what I'm
minimum.
saying. At minimum, your property value has increased
Right.
$60,000.
Right.
At minimum, you now have a minimum. This month, make sure Ms. Parker gonna correct me. $60,000 worth of equity, just at minimum, because the price done went up. Am I wrong or am I saying it right? Am I wrong or am I right or wrong?
Yeah, you might be right, wrong, right.
Okay.
So, but this is you have to look at. If your loan was 250, right?
Yes.
250,000, right?
And you paid 50% of that off.
That takes you to 125,000 left on your note,
Yep.
right? But this is the thing. We're gonna pretend you came in as a new homeowner and you didn't pay a dime down, right?
Mm-hmm.
You didn't pay nan dollar down.
Gotcha.
So we're gonna keep it flat at 250
Gotcha.
because if it was 250 and then you came in and you paid 15 down, now you're at 235. So it's those
Yeah.
numbers fluctuate, but
Let's keep
the
it
time,
simplicity. Yeah.
yeah,
Yeah.
in
Yeah.
in 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 being simplistic,
Yes.
250, you 15 years ago, you're 15 years into a 30 year, that's the 50% mark. In a perfect world, your loan balance would have gone from 250 to 125, right?
Gotcha.
The property's value appreciated from 250 to 310,
Mm-hmm.
right?
Gotcha.
Okay. So now you're looking at, right? The property value is around 310, right?
Mm-hmm.
We only owe the lender 125.
Gotcha.
You, in a perfect world, would subtract 310 or 125 from 310 to get the difference.
So you got oh shit, I'm trying 310. So I got 60 and 125. So you got 185,000
Right.
in built-in equity.
Right.
Okay, guess
Perfect world.
perfect world.
I mean, that's like, it's so many other factors that go into it.
But guess what happened? You had twins.
Mm.
And these two kids graduating high school.
Mm-hmm.
And they finna go to college.
And they have a financial unmet need.
Yes. So guess how you can finish helping them pay for college?
Or at least a year or two of
Yeah.
it.
To
Maybe not all.
you got to help the financial strain on you.
Right. So each twin has an unmet need of let's say 25,000 a semester. So that's 50,000 in a year, right?
Oh, child, where they going? That's high.
That's actually not abnormal.
Well, I know, child. Listen, these schools is high.
I mean, if we going to Ivy League, where we going?
I'm just trying to go to college. Shit, I went to HBCU. I'm just trying to go to college.
University of School.
Listen, the university of the cheapest where I can get this degree to save my life. Listen, Me and you
Okay,
have already
okay,
had a
okay.
discussion
I've
about the
been
name on the degree.
okay, boy, let's
They
go
don't
there.
give a
So let's
shit
do this. Let's do this. They have $12,500 unmet, an unmet need per semester, right? That's 25,000 a year. Here you go, Michael. That feel a
per
little better.
kid.
That's for one.
Yeah.
So that's per kid. So
Oh, jeez.
there's a $50,000 unmet need between twin A and twin B for 1 year, right?
50K.
You say, I don't want to take out no student loan, right?
All right.
I don't want to do that. I don't want to start, the debt for my kids before
Yeah, because that debt's in their name,
it's
not mom and dad,
you signing it, right?
but it's on them.
They getting it. You basically co-signing.
You co-signed for this problem.
Yeah. Like your mom and them gonna apply for it, right? They're
Mm-hmm.
gonna do that. But that time does not start ticking on payments due until like X amount of time period after
They graduate.
you graduated, degree is conferred, whatever, right?
Mm-hmm.
So we're gonna say for the first year for both twins.
It's not just if you graduate. Now, if your ass drop out of school and you done took them loans,
Yeah, once
that's
you
still on you
stop,
too. It's
right?
still on you.
Yeah, so you 7 semesters in and you decide I'm just not gonna finish. The clock starts with installment number one of 2,335
And
due.
somebody getting cussed the fuck out if you didn't finish. I'm on your ass. I'm on your ass.
Me too.
I'm on your ass. But not to digress and divert from the subject.
Right.
I'm on your ass. If you see in this camera, I'm on your
Yeah,
ass.
I agree with
Both
you.
cheeks.
Yeah.
Real tough. It's gonna be real ugly.
Oh my
You cost
God.
me this money and we ain't got nothing, we ain't got no return on investment.
Yeah,
Oh, that's your
that's
ass.
another topic. But we we know now that we have 310 on the books. The loan remaining balance is 125. The difference between 125 and 310 is 185,
Yes.
right?
Mm-hmm.
We got all of this squared away. So we're like, hey, I don't want to deal with all the subsidized and unsubsidized
Yeah.
loans, right?
Yeah, we'll hit
Standard
that too.
this and all of that, right?
Yep.
Because it's a lot.
Mm-hmm.
So you're like, you know what? I'm gonna take out me a HELOC.
Which is basically a second mortgage on your house.
Yeah, home equity line of credit.
Yep. It's a second
Yeah,
mortgage. That's
take out
what
me a HELOC.
this is what I now understood.
I'm gonna take out a HELOC on that 185.
So
Because remember, we're air quoting that
yeah.
185.
So I've heard some of my deceased family members say, I took out a second mortgage on the house.
Mm-hmm.
And they was like, yeah, we need to do repairs. I need to do this, need to
Yes.
do that.
Debt
Debt
consolidation,
consolidation.
renovations,
And I didn't
education, all the uns.
I didn't understand
Mm-hmm.
financially what they were saying until I've gotten older and been married to this woman sitting next to me for her to educate me and be like, they basically borrowed
Mm-hmm.
what they had put in,
Mm-hmm.
but then had to pay it back.
Mm-hmm.
And that's what a second mortgage actually means.
Yeah.
I've got built-in equity.
Mm-hmm.
I'm going to borrow some or all of it,
Or as much as you
much as
can,
you can,
much as
because
they'll allow.
yeah, that part it's all kind of
Yeah,
caveats
it
depending
is.
on the lender.
Yeah.
Remember that word lender, because they're going to
Mm-hmm.
lend you what you've put in,
Right.
what you may be owed. Yeah, we
Right.
gonna
Because
run
we're
that.
not doing no cash out refi.
Uh-uh. See,
That's
no, yeah,
another
yeah,
topic. We're
yeah.
not gonna
See,
do that. We're
yeah,
not
yeah,
gonna
yeah,
okay,
yeah, yeah.
okay.
Let's stay right here. We get to that point now that kids
Mm-hmm.
need to get their education paid for.
Right.
So now we are at the point of, all right, we done went down Avenue A, B, and C. D is, let's go get a second mortgage.
Right.
The second mortgage says, you all got up to 185,000 that
Mm-hmm.
y'all can borrow.
Mm-hmm.
We got 2 children. They try and go to college. We got to pay for this, that, and the other. Mom and dad is like, nah, I can't go get a loan. Like,
Or I don't want to.
I don't want to go to the bank because now the bank trying to hit me for 40, maybe 35, 40%.
Right.
And that's just sometimes outrageous. Listen, people don't understand. Those things do happen.
Oh boy.
You don't understand because you will never know until what? You try.
Yeah.
So now we're looking at, all right, they come down the avenue of second mortgage.
Mm-hmm.
I put in, we put in, they put in they've done their part. They paid on time, paid regularly, not missed nothing, kept their credit in good standing.
Right,
A
right,
lot of
right.
people don't understand that credit line is your mortgage. That's a credit line,
It
right?
is.
You got that because you met what criteria.
Right, 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 right.
So now, after meeting the criteria for 15 of the 30 years, you're going back to
Right.
guess what now? Apply again.
Yeah, 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 yeah.
Because you for the second mortgage, you have to do what?
You gotta apply. Oh, and they're gonna reappraise your house. If you're putting up that house, you're trying to get the value out, they're gonna come reappraise. They're gonna see, is your roof new? Is your plumbing good? Your lights turning on?
And that's where the 310 comes into
Right.
play. Somebody walked through your house, walked your property line, and said, man, and everybody else around you did something good too. Because you got to understand, your value don't increase just because you sitting there.
It's your neighbors too.
Yeah, boy.
It's your neighbors. They got all these chickens and animals in the front yard.
Neighbor.
Mr. Appraiser comes by, and let's give it a bug. They don't always have to physically come by. They will drone that thing.
They will fly over your
They will
house
drone that thing.
or your
Yes,
property.
sir. We'll drone it. They like, we ain't gotta see the inside. We need to make sure the outside is still there, right? And you ain't put up all this trash around it. They will drone that thing. Yes, sir, they will.
So
Mm-hmm.
remember when we used to ride through certain areas and they had 12 cars parked on the
You gotta
grass?
go to cars. You gotta, because I don't need my Google photos showing all them vehicles. But we've got on topic.
No,
So,
no, we still
oh, we still on
technically
time?
because guess
Okay.
what? That went into how you got the
It
310.
is the property value assessment.
Yes. So when people be like, man, I don't care what they do over there,
I do. I
you
need you to
should.
fix your fence.
I need you to not have 12 leaky cars in the grass. If
Did you
you
say,
is Joe the
wait, did
auto
you
mechanic,
did you say leaky?
man, have you looked at some of the cars on the
You
grass?
said 12 leaky cars.
I mean, you do see the spots.
I'm
Them
sorry.
spots ain't just dead grass. Them spots is something
Leaky.
has leaked
Oh.
out and has killed. It has killed the grass.
Wait a
It wasn't just
minute.
lack of daylight. It got killed because the transmission fluid, the leaky oil,
I'm
the
done.
combustion, the busted up engine,
I'm done.
all that stuff has
Mm-mm.
happened.
Mm-mm.
I mean, no,
No,
we
today.
listen. So I'm gonna stay right here because I was just gonna go way down the rabbit hole. I'm gonna
No.
stay right here. But we talking about getting that second
Yeah.
mortgage. And you're getting that second mortgage to fund education.
Yeah. Yeah.
And we've looked at now we understanding how this happened for a few generations.
Uh-huh.
Because man, we sitting up here like they had 3, 4 kids. They weren't no millionaires.
Nope.
Then you turn around and 3 or 4 of them kids all went to college.
Right.
They all got degrees.
Right.
Ain't nobody popo. Not popo like the police. I'm saying po like they ain't
Poor.
poor, poor.
Poor.
But how did mama and daddy make it all work?
Mm.
They
They
had
had to,
to do some things.
they flip money.
Exactly.
They
They
flip, because
flipped
if
what
you,
they had
yeah,
legally.
illegally, yeah. So if you take that 185 in your head, you're like, I want every cent of that 185. The banks may say, well, out of that 185, we have to calculate in A, B, C, D, E, F, G. The most we can look at allowing you to access is 150,
Yeah,
right? And then they pull your credit and everything, and they be like, well, we can get you about 125, right?
exactly.
So, which is okay because based on your numbers, twin A needing 25, twin B needing 25 for a year, that's only 50,000 for 1 year. Out of that 125, you can cover 2 years.
That
Okay?
gets that gets you room.
Yeah, you can cover 2 years.
That gets you room. And I'm using twins as an example, but
Right.
it could just be one child.
Yeah.
You flip that to one, that covers four
That
years.
covers all
So
4 years.
you told the kid, hey,
You got 4 years.
just like my mama told me, she said, I'm gonna spot you for four. That was it. And listen,
Oh
when she
no,
said spot me for four, because I already had a child, she told me up front, I'm gonna help you with my grandbaby, but you got 4 years to get your ass out of school. That's it.
hmm
I'm gonna spot you four. She was serious,
Oh, she was.
and
Oh
I
yeah,
took
she was dead ass.
my black ass got out in full. My wife got scholarships
Yeah.
not the wazoo, but they gave her constrictions. What was them constrictions? You got to keep a certain grade point average.
Yeah.
You got a certain time limit.
Yes.
They didn't give you all that money to take 7 years.
No.
No, you
Got
had to
two
get
degrees in 6 years.
you had to get on down.
Yeah. No, they spotted me X amount of years. They was like, you gotta go.
Yeah, so that's how it works.
Hmm.
Even when you're getting a mortgage or getting a loan, they only quote unquote spotting you
Yep.
30 years.
Hmm.
You got 30 years to hit this mark.
Hmm.
If you don't hit this mark on year 30, it's a problem.
Yeah.
That's the whole point we're talking about. Like everything just doesn't come with the oh, we just gonna do this to see how you figure it out.
Right.
No, you have to handle your business.
Yeah.
And when we talking about these loans and getting these valuations, that's part of handling your business,
Hmm.
right? We gotta look at that. But Miss Parker, I know.
Mm-mm.
Thought she had me. She looked at me and said, I ain't got it. Maybe she do got it. I know you got that end piece to wrap this up for us. Because you the financier. That means she run the money. She do run the money. She run all the money.
Mm-mm-mm. I don't know if I have anything because I feel like this is a topic we have talked about in so many different facets. Like so many. I even practice my own preaching, right?
Oh yeah, she do.
But I will say that the only way you can even have these options is if you have enough gumption to get out there and actually own what you're living in.
What they say, closed mouths don't get fed.
Yeah, can't be afraid.
Catch y'all next time.